Greetings, JT TickerMonkey.com here. I want to talk about Palantir. So we're going to go over this trade that I executed at the end of the day on Friday, as Palantir was one of the names that was mentioned could be an addition to the S&P 500. So this is the option that I sold short. Now, let's just talk about this for a second. Now, back in June 7th, you had the same S&P, reconstitution, basically, where they'll take a few names out that are laggards. They'll add some new ones in that have met the requirements. You have to have multiple quarters in a row of profitability. There's a few other things where you got to get there, market cap, all that to be in the S&P 500. Palantir meets those requirements. Now, what we're looking at here is the tweet that I put out at the end of the day talking about this trade. But real quick, we'll scroll down a little bit. I went back and I pulled up this last trade that was with Crowdstrike. Now, the interesting thing here, and I was kind of a wimp on this one because it was one of those situations where it was almost too good to be true. Crowdstrike on June 7th was, everybody pretty much knew that it was going to get added to the S&P 500. Now, they don't announce this until about an hour after the market has closed. So you have to wait around a little bit for it. Actually, yeah, it's a little longer than that. It's an hour and a half. Market closes at 3. I think that info comes out at 4:30 my time, Central. So about an hour and a half after. Anyway, so a friend of mine, Mike Phoenix, in the chat, the TickerMonkey, he bird dogged this CrowdStrike situation, which back then, it was this thing. CrowdStrike was trading at 349, and we were going into the bell. And you can see here, this is a screenshot from then. You can see how the out of the money puts were well bid, which is unusual because these were weeklies. They were expiring at the close. The only options that continue to trade past the market close are QQQ and SPY. The reason I know that is because I found out. I had a good option trade one day on some 0 DTEs, and I thought I had made the money at the end of the day, and they kept trading. And I was like, oh, lesson learned. So index options like that on QQQ, SPY, they will keep going until 15 minutes after close. Everything else that's equity related, as soon, as the bell rings on the expiration date, that's it. They expire. So it was very unusual. The clock was ticking down on these, and these were still well bid. Now, the ones that I ended up doing on this were the 340s, and I was a wimp. I only sold 2 of them for like $1.76 each. So, a little dinner money, and the lesson was learned there. Now, fast forward to today, this was that trade back then. That was sold for $1.76. But fast forward to today, and it was a similar situation. Now, if you're not following Kier on Twitter, you should. Kier, Brigos Capital was his hedge fund, successful hedge fund. He's got a brother that's a movie star. But anyway, Kier is a very, very smart guy, member of the chat for a long time at TickerMonkey. Appreciate that, but he brings a level of wisdom from the institutional side. So he had mentioned earlier in this week a few names that were being tossed around as potential ads. I think everybody in the, on Twitter knew that Palantir was being considered. And then Workday, TTD, Apollo, and Dell. Now, after the close, we finally got word that it was Palantir and Dell. Now, there's some weird activity going on, and I had forgotten about it, but Phoenix, Mike, in the room, he mentioned Palantir, the extreme relative strength. And, when he mentioned it, you know, relative strength all day. I remembered the CrowdStrike thing, and I said, "Are we selling puts?" Because I figured he probably looked again. And at first he said no, but then he said, "But today's 30s are 50 cents." And now this was, 12 minutes to the close, and those 30s were 50 cents. Now the stock was trading like 30, 30, 33. That's where it closed, but it was trading in that area. And so I went ahead, and you can see it only took me a couple of minutes. I went and I looked because the low of the day on Palantir was 29.50. So I went ahead and I sold 20 of the 29.50 puts expiring today, because this thing had, weekly options. You don't go out and do this. You wouldn't do this for an option that was expiring next week. You want it dead at the bell. So, and remember, when you sell a put short, you're cash securing that too. So I had to have $59,000 for 2,000 shares sitting there, because they're gonna hold that. Basically, your brokerage just kind of pulls it out of the side. You lose that buying power, because if that thing closes at 29.49, congratulations, you just bought 2,000 shares of Palantir minus the $640 you pulled in for selling 20 contracts at 32 cents each, minus your commissions, of course. But anyway, selling this seems like free money. Yes. And it's very weird because there's no free money in the market. If you think there is, you're going to get run over. But anyway, sometimes there is. And 2 times in a row now, we've done it on this situation. Now, here's the deal. So you can kind of read this on your own, but you can kind of see I ended up coming back for a little bit more. I'm telling them here what I had just done, and there were some people that they did the same thing. They came in on this trade with me, and you can kind of see 2 more minutes to the bell. It was actually ticking up in price, and this is what CrowdStrike did too, because when I originally started in on the CrowdStrike one, I was looking, they were $1.50, and then they bounced up to $1.76. But the clock's ticking down. And the CrowdStrike example, it was 9 points out of the money. I couldn't believe it. What's the catch? So anyway, same deal. So this one's ticking up. The stock price is holding. There's 2 minutes left. The low of the day is 29.50. It's trading 30.33. I'm selling 29.50s. For that thing to come unglued with 2 minutes left, it's possible that that could happen. But you have a crowd that is bidding the stock, and it's been positive on a horrible day. The market on close, I think, was like $3 billion to the buy side. So it didn't seem like you were going to have a rug pull. So what did I do? I sold 10 more at 44, so pulling another $440. Now I'm on the hook again for 29,500 if it gets put my way, minus those premiums collected. But then with 15 seconds left, of course I'm sitting there cheering, go clock, go. But with 15 seconds left, they were still pretty well bid and obvious about to go worthless. So I sold 10 more with 15 seconds left. So 40 contracts total, pulled in 1,490 in premium. Of course, I was risking having to spend 118,000 to buy 4,000 shares. Now, had I gotten put, that would have been me buying 4,000 shares for a total, when you take out the premiums collected, I would have been paying $29.12 a share. The stock's going out at 30.33. So it seemed, like Scott says down here, it's crazy. It makes no sense. Okay, well, let's try to make some sense of it. So, and here's those last sells. I had a trade in between that I was closing, so I didn't get the first one captured, but there's the last two. And you can see, 2 minutes, 10 seconds left on this 10. And I did limits because what was happening was the bid was lower and the ask was a little bit higher, but there were trades going off. So I just simply, placed the limit right on the midpoint and it filled me. So, and I did that on the last one too. You can see 15 seconds left. So, anyway, it's pretty wild, but I'm trying to unpack this. Why does this happen? And the only thing I can come up with in the situation is the market makers, but not really the market makers. I think it is institutions. Information gets, you know, leaked around all the time at the big brokerages. They all knew which ones were getting added today. Now you can kind of see it when you look at some of the options. And here's the thing. Let me pull that up. So here's the Palantir option chain, and you can see, these 2950s. The trade has cleared. The cash is in the account. It's off the P&L over here. It's early morning Saturday. So this is what was going on. This was the last bid that was showing. Remember, the stock was going out at 30, 33. So it's just it was pretty interesting what was going on with out of the money. You can see all of these should have been zero bids showing. That's usually what happens. But you still had premium, which was just kind of odd. You could have even sold the 30s and pulled the money on those, but I didn't. I wanted to go out of the money a little bit more, afford myself a little protection. Now, another one that got added, we'll swerve a little bit here, but another one that got added was Dell. And you can see here, it went out at 102, but you can see here, there's still bids to the 101s and the hundreds. And you can see the volume on those. Now, when I pulled the chart on those, which let's go now, and we'll take a look. If I can get my chart, there it is. All right, so you can kind of see here, and we'll go to a 15-minute. But you can see here, this is us coming in that last 15 minutes and still selling these, but they were bidding. And if we look at Palantir stock at the same time, you can see how it wasn't coming off. You can see it would have had to have come off all the way down to here in the last few minutes. That's why the first 20 contracts with 11 minutes, 10 minutes left, that still had some risk to it. But then it became a function of I was just watching the clock as it was ticking down. The mechanics of the trade were those would be worthless at the bell. So I could have done more, but after having a phone call with Cubby called me and we talked about it a little bit because he wanted to understand the mechanics behind it a little bit more and why. And of course, I say, the next time I should do a little bit more, but then we both laughed and said, well, what happens when you do that? The next time you'll get totally wrecked. So, I was happy I stepped it up a little bit from the last time because the last time, was kind of uncertain. But again, in the market, you make trades, you learn lessons, and you have to file those lessons away in your mental library so you can pull them back up and lean on that experience in the future. And that is all that I did today. And the reason I went with Palantir and not a Dell or a Workday or any of those others was Palantir made the most sense to me. Younger growth company on the come up, has a an earnings runway in front of it. It's becoming more popular. So it made sense. And had it got, put my way, the stock is in good shape here. You can kind of see this low at 29.31 over here, this oops reversal back above the 21-day. That's the other thing. Doing this with something above around the 21 day. If I was trying to mess with Dell looks like crap, or some of the other ones that were mentioned, potential. Workday could have worked. And then actually, what were the other ones? Oh, Apollo. I'm just not interested. That's private equity name. No interest there. But Palantir made the most sense to me. Trade Desk was another that was mentioned as potential. And I just, I'm also looking at the chart here because, you got all this funky stuff going on here with these that, oops reversal, OEH, 3-bar break, OEH, down to the 21 day, failed wick setup, flush. Just, I didn't want to mess with that. Palantir made the most sense technically to me today to do that trade. And again, just circling back, there was the Dell. I mean, those expired uh, worthless. So you could have pocketed, but the premium wasn't enough. Yeah, I'm not going to do this for a nickel or a dime and take on that kind of risk. So 32 cents and then 44 cents and then 41 cents. That made sense to me. It was worth taking the risk, especially when the clock was lined up there. Now, to pull this all together and finish up on it, the reason I think this happens is I think it's a smokescreen because these institutions, they know who's getting added. And what I think goes on here with this is I think they're simply using those puts as a smokescreen because it causes confusion because you're looking at something that's about to expire. And why are these bid? And it can make you think twice about buying the stock because there's a lot of people that were buying Palantir to game that it got added in the after hours. Now, Kier, he just waited. He waited until the market closed and then he took a little speculative position in the stock in the after hours while we waited on the news. And again, seeing those puts expire worthless, all of that could have emboldened him a little bit more to do that, but it was worth him to take a little risk. And he got rewarded. The stock ended up spiking up to 32.88 in the after hours and, went out 32.69 bid. So the reason I think this happens is I think they use these puts as a smokescreen to try to keep people from running it up, the stock that is, into the close and beyond in the after hours. It allows them time to buy more stock. And I think they're just simply willing to lose tens of thousands of dollars on puts that, there's somebody on the other side of these things. I'm selling, somebody's buying those puts. Market maker or some fund, whoever it is, they're willing to create this smokescreen and lose probably tens of thousands so they can make hundreds of thousands on the stock pop when you get the news that it got added later on. So that is what I think went on there with Palantir. And I'll remember it, again in the future. And let's just real quick, we'll show the pop. So there you can see, that news finally comes out and you get this instant pop. Now, the thing is, this moved so quickly, it's very hard. In the after hours, you have to do limit orders. It's hard to get that fill and how quickly that jumped up. I mean, if I just go to my 3-minute, that first 3 minutes, it jumped this much, up to 32. And then, oh, there's our friend, the open equals low. And then it pushed and then flags out. Now, there are people that have calls and stuff for next week. You don't know how it's going to open on Monday. Don't know what's going to happen over the weekend. It may, by the time the market opens and the pre-market, this may fade all the way back. It may not, though. It may hold this gap at this price and then we'll see. And then you'll probably have a lot of people trying to flip out of their calls and stuff when they open. There will be a volatility crush, and then we'll just have to see what goes on with Palantir. But I'm not quick enough to thread that needle. I liked what I did because it's a closed out trade. So anyway, that is what went on with Palantir, and we'll do it again next quarter. There's an S&P, change. We'll see what names are offered up then, and it's possible we may get this situation again. And I'll just have to temper myself the next time to not go overboard. Because I tell you, with 15 seconds left, I almost sold 100 contracts instead of another 10 on top of what I was doing. But then you have to remember the risk. So to finish this out, it's basically a 1.26% gain on 118 grand. That's what that was, 1490 on 118 of risk. Didn't actually have to outlay the capital, but it was being held by the broker. So I lost that buying power into the end of the day, but it's all back. It's refreshed, ready to go for Monday. So anyway, that was the Palantir trade. There's a lesson in there. I'll extract more from it and apply it to the next time. So I hope that clarifies a little bit of why I did what I did on that. And, we'll look for it again.